Now, who is a free zone person? Qualifying free zone person is a person that meets all the conditions of the free zone corporate tax regime and hence benefits from that regime. So in order to be a free zone person, you have to meet all of the following conditions. The first is you have to have an adequate substance in the free zone. What is exactly adequate substance? That is basically that you need to have an adequate amount of assets in the free zone. You need to have adequate amount of employees in the free zone. You need to have an adequate operating expenditure in the free zone. Now you can have it either on your own or you can outsource it. But when you outsource it, you have to show that the control and management in respect of such activities is something that you are exercising at your end. Second is you should have the deriving qualifying income. Now, what is qualifying income? There's a ministerial decision on it which mentions out various incomes which will be considered as qualifying income. If you get this income, the exemption is available. If you don't get this income, you get non-qualifying income, then you're not eligible for the preferential regime. Of course, there's a de minimis threshold, which we will look at. Not have made an election to be subjected to regular UAE corporate tax regime. What that means is you should not have made an election to be subjected to UAE corporate tax. Now, in some cases, what the free zone person can do is they can say, I don't want to opt for a 0% tax regime. I want to pay 9% corporate tax and live with it. In that case, if you opted, obviously 0% is not applicable. It should comply with arm's length principle and transfer pricing rules and documentation requirement. So under the UAE corporate tax law, all the transactions done with related parties, whether domestic or foreign, and with connected person are required to be at an arm's length. What arm's length means is that basically you are effectively transacting as if the related party, were an independent person dealing with you. More of it in some of the subsequent FAQs that we see. And it should prepare and maintain audited financial statements. Now, this is something which is important. For a company looking at 0% corporate tax rate, they have to prepare and maintain audited financial statement. Failure to meet any of the condition. Important word is any. So if you meet 4 condition but don't meet the 5th one, or you meet any combination of but not all, then this exemption is not available. But if you meet all the conditions, then you will be considered as a qualifying free zone person. If you lose that status, then what happens? So in a nutshell, basically what happens is you are not treated as a qualifying free zone person for a period of 5 years, beginning with the year when you do not meet any of these conditions, right? And therefore you will be liable to pay UAE corporate tax at the rate of 9%. How are qualifying free zone persons taxed under the UAE corporate tax regime? In case any one of you has question, you can please put it in here in the chat section, and I'll be answering them separately. So qualifying free zone person, that is a person who meets all the requirements which we had discussed earlier, will be subjected to 0% corporate tax rate on their taxable income from qualifying activities and transaction with other free zone person, unless the income is derived from excluded activity. What that means is now is that if you get certain taxable income, why is the word used here is taxable? If an income is anyways exempt, it is subjected to 0% corporate tax. Therefore, the use of the word taxable income signifies that if you get a taxable income, which is income from a qualifying activity, you will be eligible for a 0% corporate tax rate on such income. Or transactions with other free zone person. This also comes with some riders that are elaborated in the subsequent FAQs, unless the income is derived from an excluded activity. What is an excluded activity? An excluded activity is an activity which is defined in the ministerial decision, and if a free zone person gets income from such activity, it is going to be subjected to a normal corporate tax rate, right? The second situation can be a qualifying free zone person may have a branch in the mainland, or they may have a branch in overseas which constitutes its permanent establishment. So if a qualifying free zone person operates outside of the free zone through a PE in the mainland or in a foreign country, the profits attributable to such PE will be subjected to UAE corporate tax rate at the rate of 9%. Now here two things are important. The first thing is, what exactly is a PE? When it comes to a PE, which is there in the mainland UAE, you need to see the provision of the UAE corporate tax law. But when it comes to a permanent establishment in the foreign country, whether or not a PE exists, you need to see the laws of that country plus the tax treaty between UAE and that foreign country in case one exists. Then you need to identify what are the profits attributable to such permanent establishment. And these will be subjected to UAE corporate tax at the rate of 9%. Right? In case of a foreign PE, there is also an exemption. I mean, there is also a provision under which you can claim exemption in respect of profits of those PE, provided those profits have been subjected to tax in the country where the PE is situated. We will see in detail this particular point in one of the subsequent FAQs. To prevent foreign PE profits being taxed twice, both in the UAE and the foreign country, relief from corporate tax is available under the extensive double tax treaty network of UAE and as indicated under the UAE corporate tax law. We discussed this. Certain income from immovable property in a free zone is also subjected to 9% corporate tax rate. Right? So let's say if you are a free zone person and you have a commercial property in the free zone, right? This applies to income from transaction with non-free zone person in respect of commercial property. Now, if there is a non-free zone person, he takes this commercial property on lease and gives the rent to this person. This income will be considered as a income which is taxable. And to income derived from residential units, hotels, and other immovable property that is not a commercial property, regardless of who the payer is. So for a commercial property, the requirement is that the transaction should be with a non-free zone person. But in respect of income from immovable property, which is in the form of a residential unit, hotel, or any immovable property which is not a commercial property, it doesn't matter whether the lessee is a non-free zone person or a free zone person. Right? So these income will be subjected to UAE corporate tax rate at the rate of 9%. Any questions? Okay,